Raam, as Omicron starts to spread throughout the globe, here in the UK, there are rumblings of a voluntary lockdown, if not a mandated lockdown. You do have some European countries locking down as well. What has that mean for shoppers' propensity to continue to go out, to continue to buy things during the holiday season?
Hi, Danny. So obviously you touch on a very critical point, and this comes at a point where we're looking at perhaps the most important month of the trading year for retailers, and clearly one of the metrics we are watching very carefully is the drop in footfall. So clearly, destination shopping centres, malls, we expect to see footfall dropping by 25% compared to say a baseline of 2019. So this is really unfortunate for the sector, especially when a lot of the retailers were investing into the expectation that the Christmas would be a bumper one, especially especially because the third quarter was fantastic in terms of numbers, in terms of retail performance, and that kind of momentum continued right through to November, just before we heard the spread about Omicron, which is a new issue retailers have to deal with.
Well, given that this is the most important month and it's being curtailed and it's already been a tough year, despite, as you were saying, that strong third quarter, can retailers survive another lockdown at this point?
So clearly, I mean, there are some positives, even though the situation looks it's not a great time. But I think one of the positives we can look at in all this, and this is well reading into 22, is e-commerce is in a really good place, and retailers have invested in their supply chains and e-commerce and their distribution capabilities. They should be able to weather the storm. That said, I mean, the sector is very different. There are smaller retailers who would undoubtedly be significantly affected by what's going on, by consumers not stepping out of their homes. So there will be a kind of a slow recovery. There would be uneven performance as well. I think that big versus small retailers with solid brands, they will continue performing well. So there is that, there will be two-tier, performance outlook coming out of this pandemic, and which we've already seen actually. E-commerce really doing well and helping many retailers, offset some of the pressures they see in the physical stores.
Raam, do you see Omicron, for retail, is Omicron going to be broadly inflationary because of the disruption that we could continue to see to supply chains?
So I know that's one of perhaps the most important fallouts of Omicron, in our view, certainly, is that many retailers sort of worked through last few months overcoming the supply chain issues. Inflation has been quite widespread. That said, in our view, we see big retailers, consumer goods companies being very well positioned to deal with inflation as it stood. There's a lot of capacity for the consumer to take some of the price rises we've seen over the months. We expect to see some of them feed through as we go through the festive season. Promotional activity is being really cut across the sector. All that was before Omicron, and now, of course, all the retailers we speak to are reevaluating what they do with the stocks they built up in the anticipation of Christmas. But going back to your point about inflation, I think one of the biggest worries we have is inflation around wages in particular. The commodity inflation is very much priced into products, but wage inflation, especially when you factor in the fact that many employees will not be able to turn up to work, there will be absenteeism, and a lot of those replacement, headcount at the stores and restaurants, etc., they come at a higher price. So that will lead on to undoubtedly some pressures on the wage bill.
What are the self-help measures then that the sector can take, Raam, as they look ahead to 2022? We still don't know a lot about Omicron that we hope to find out in the coming months, and we'll see how that plays out. But what are the self-help measures? Just give me an example of one or two.
So the sector has been remarkably resilient, basically through a combination of government stimulus, which you've seen has been quite an important factor. But you do touch on self-help measures, which has been absolutely important for the sector ever since we've gone into this pandemic. And this ranges from a lot of operating measures. I'd sort of break it into operating measures around costs, managing costs, managing operations, investing into the supply chain, rejigging distributors, working through the supply chain to find efficiencies. So there are a host of operating measures which the sector has done. And one of the biggest ones has also been ramping up the readiness to go into the online world, into e-commerce. Some of the retailers are in different stages of e-commerce adoption, but a lot of them have done really well from an operating standpoint. On the financial side, again, from a credit rating perspective, which is an area we look at a lot, I think we've seen extremely favorable financial policies for the sector. So companies have been really focused on managing the liquidity, which has been quite abundant, as your previous speaker said. But equally, from a balance sheet management perspective, things have been pretty robust. And that includes even at many retailers, they cut down shareholder returns, they focused on working capital management, and a lot of hygiene aspects around financial management that really helped them overcome some of these challenges we've seen over the last few months.
Okay.